Welcome to the Paru Zings, Appraisers on Purpose podcast. This podcast showcases inspiring appraisers and professionals from the industry who are leaders in their field. How did they get to where they are? What have they learned along the way? And what do they do now for their teams, their clients, and the industry? Your host is real estate investor, entrepreneur, and appraiser, Michael Hobbs.
Oh, well, welcome back. We are so excited to have this opportunity again to share with you a talented and energetic peer who's done a number of very interesting things. But before we jump into that, an important call to action. Definitely hit that like button. As you continue to do this, it's opening up more and more opportunities for peers to learn, to share, to grow, and to connect. We really appreciate that. Today is no different. We're so excited to have Jaimee Keene with us. Jaimee, welcome to Paru Zings.
Thanks for having me, Michael. This has been exciting and getting to know you along the way.
I appreciate it. I've been eagerly looking forward to this opportunity today. And for everybody's benefit, Jaimee, were you born this way or how did you get connected to the valuation profession?
I think I was born with a numbers mind. I'd always excel in math, in high school and beyond. I was taking college level statistics when I was a high schooler, getting college level credit for it. So maybe a little bit born with an analytical mind, but really was fascinated by real estate at a young age. When I grew up in Colorado, so when my family would drive up I-70 to go skiing, I would look out the window and see all the big fancy homes along Genesee and up I-70 towards Evergreen. And I used to tell my parents, like, one day I'm going to sell those houses. And they had no idea where that was coming from. Nobody in our family had anything to do with real estate, but for whatever reason, I thought I was going to sell the mansions on I-70. So I must have been born this way.
Love it. Sell the mansions on I-70. That is phenomenal. So were you a child prodigy and did your first mansion sale at the ripe old age of 11, or how did that go?
No, my dad was actually in the construction industry. So, in a sense, I grew up surrounded by, residential development, if you will. So I got to be on job sites, kind of pick up the lingo along the way. I knew what a truss was. I just picked up on the construction lingo. So when it came time to go to college, I actually put myself through school studying finance and real estate at Colorado State University, but put myself through school working two jobs, one of which was a mortgage company. And by the time I was a junior in college, I was originating residential mortgages. So
wow.
Never sold that mansion, but really got my feet wet in underwriting, understanding credit, understanding the mortgage process. And I had bought my first house my senior year of college. My boss recommended to me, she's like, hey, I know how much money you make, probably have a decent credit score. You should apply for a mortgage. And I kind of laughed at her. I was like, I'm 21 years old. So that doesn't matter. And so I submitted my first mortgage application, got approved for an FHA loan, and bought my first house for $97,000. So
I love it.
Yeah.
I love it. Tell me that house is worth what, like 10 million today?
Yeah, right. Something close. That's a college town. So yeah, it's done well.
Wow. So here you are, senior year in college, you get some guidance to buy your first home, and you do. And did you stay in the mortgage space, or what happened?
I did not. I applied to grad school, got accepted into an MBA program. So I went and did that, left the mortgage business, actually sold that house and used the proceeds from that house to pay for grad school. So I was able to kind of invest in my future, invest in myself from that initial house that I purchased. But I learned a lot about leverage. My roommates actually had paid my mortgage payment because they were paying rent to me. And then there was enough rent there to cover my living expenses. So I lived for free. I understood really quickly how real estate could work, and just was fascinated by the whole real estate investment process from that early age.
That is fantastic. So I think today's terminology would be you were house hacking back then. And I still can relate to that. That was my first place in Chicago, where I went from being a peer that was, just a whole group of roommates, to suddenly buying the place, and suddenly my roommates were my tenants. And
right.
I was grateful that kept paying my mortgage, and that gave us drinking money on the weekends.
That's right. Exactly. So
wow, look at you. I love that. Investing in yourself based right off of your first investment coming through college.
Yeah.
Did you have a particular area of study when you went back to get your advanced degree?
Yeah, I focused on finance. So my MBA was just a general MBA, but I took additional graduate level coursework in finance, and then worked for a bank right away after I graduated. And this is all in 2000. So the bank that I worked for, I was in the energy and telecommunications division, and I hated it. I did not want to be a banker. I actually felt like I was really missing the real estate side, which was so exciting for me kind of earlier in my college years. And I was trying to figure out, how do I get back into the real estate world?
Mm-hmm.
So I had actually reached out to the appraiser that I used to work with at the mortgage company and just said, hey, Randy, I know you're an appraiser. I don't know much about the profession, but can you tell me a little bit about it? And can you tell me how I can get my experience and start working towards getting my appraisal license? And frankly, how do I get into the commercial side of it? So working at the bank had exposed me a little bit to the commercial arena that I didn't really know existed. But, even though Randy was a residential appraiser, he actually introduced me to the Appraisal Institute and said, these are the classes you need to take. You'll have to do an apprenticeship. So I worked at the bank during the day, and then at night I'd studied for my courses and got everything I needed to get in order to get my appraisal license, and then started calling on just friends, peers of folks that worked in the real estate industry, and just said, hey, I got my license now. How do I make this jump? When I left the bank, I actually had to take a pay cut. But I was actually okay with that at the time. And, I didn't have, kids or commitments or anything that was holding me back. So I looked at it as like one step back so I could take 12 steps forward, and then really set myself up to get back into the real estate game again.
Fascinating. So you self-starter, jump right out there, get going. What was that like for you getting into the profession, coming out now with a graduate degree, leaving the bank that you didn't want to be a part of? What was the training like back then? What was the community and the exposure like back then?
I joined a really good group. I think there were probably 12 appraisers in the office, folks that were really motivated and helping kind of train me. I learned from some really great people who were just good mentors and peers. And I felt very fortunate to fall in with such a great group. I had actually started appraising properties up in the mountain communities. So where I live down in Denver, a lot of the resort markets are about 2 hours away, and we had a ton of work up there. We worked for one of the largest banks in Colorado, and they had a huge presence up in the mountains, but nobody wanted to drive from our office to go work up in the mountains, and I was all over it. So I started, I volunteered myself all the time. Like, I'll go to the mountains, I'll ski or snowboard, after I do my inspections or whatever I need to do, go to the county and like actually look at physical cards of like property records, because nothing was computerized back then. So it did require a lot of like face time at the assessor's office. I learned really how to investigate properties, do research, really from pre-internet days. I mean, the internet existed, but a lot of the property record information wasn't up that yet. So I was going to the mountains. I would I felt like I had a really good work-life balance. I would work in the mornings, do inspections, kind of meet with whoever I needed to meet with. And then in the afternoons, I would either mountain bike or take my dog for a hike or go ski or snowboard. So I felt like I was living the dream.
Sounds like you are living the dream. I met a lot of people that still like that lifestyle right now. I mean, that's phenomenal.
Yeah, it was really good exposure. I appraised a lot of different property types. I did some hotels. I did ground up condominium projects. I did residential communities, paper lots. I did office buildings. I got exposed to a lot of different property types in a market where there wasn't a lot of data. So I was starting to accumulate all this data. I had kind of all the knowledge, and there wasn't really, it's not like CoStar now where you can just a couple clicks and you can get all the information that you want. That just didn't exist back then. So I was able to really become the market expert up there because I understood those markets really well. And I was up there on such a consistent basis.
So you became the local expert, is what they might say.
Yep, the mountain appraiser for sure.
Mountain appraiser. And how long did you stay the mountain appraiser in that role?
Yeah, for a couple of years. My son was born, and I still tried to balance that out. So my mom was great. She would watch him for me while I still made it up to the mountains, but it became harder and harder. And then when my second son came around, really going to the mountains was just not feasible anymore with two little people in my life. So I...
responsibilities, they call.
Yeah, responsibilities crept in, and, you get 2.3 kids and a mortgage and a dog, and then that work-life balance gets a little wonky. So I decided that it made more sense for me to focus on the Front Range, not be spending so much time in the car driving up to the mountains. So I started working on properties down here in the Front Range of the Denver area.
So, Jaimee, not everybody is familiar with some of the couple things you just mentioned. So maybe we'll just help them out for the Flatlanders out there. But when you say Front Range, what are you referring to? And give people a little sense of the topography.
Yeah, so in general, we consider the Front Range everything from Colorado Springs up to Fort Collins, kind of along the mountains here on the flat part of Colorado. So everything up to the foothills. There's probably a 2-hour stretch of I-25 that kind of parallels the mountains here. And so yeah, Front Range. I did everything what I would call local, kind of within a 2-hour radius, but not going to the mountains.
Love it. And even the Front Range, what's the elevation of the Front Range?
5280, mile high.
Yeah, I mean, you're still way up there. I mean, you're not up there on the mountain properties. I mean, compared to like down here at sea level, practically with the Lake Michigan and Chicago.
Yeah.
But that's a total different thing. Oh, that's fantastic. So here you are, the Front Range, still doing valuation work. Were you with the same group now, or did things start to change?
Yeah, I stayed with that group for quite a few years. They gave me a lot of flexibility. I could still be a mom. I could, kind of work at my own schedule and my own pace. But I felt like I wanted more. I was hungry for, I think, some more challenging, more complicated assignments. And frankly, I wanted to expand my horizon a little bit. Maybe not get out of valuation, but understand maybe the other side of the equation. Like, how can I use this background, everything that I've learned, and maybe go and work for a developer or work for somebody who's actively acquiring real estate or putting together a portfolio? So I left the company to go join a group here in Denver that had accumulated properties across the country. They had medical office building portfolios. They had rail-served industrial properties. They had office buildings. They had some multifamily. I mean, they had a pretty diverse portfolio, and they were growing that portfolio. Mm-hmm. I went and worked on the team there to identify acquisitions, analyze those properties. I was getting on a plane, I was actually the one now walking appraisers through properties that we were buying.
Oh, wow. Like, you really turned the corner.
Yeah, I wanted to see the other side of it. And so I did. I got to really expand my knowledge, expand my contacts, really kind of get a much broader scope of what this real estate profession could look like outside of valuation. So it was really exciting, but it was also very demanding. And with 2 little people at home, the travel became a little bit much. The job was pretty demanding. And I decided, about a year and a half into that, I need to kind of slow back down again. I need to go back to valuation because I had the flexibility that I really needed as a working mom. And so came back to work for a small boutique appraisal shop in Boulder, and they focused on eminent domain, which was a segment of the valuation industry that I didn't have much experience in. So I did get to expand my knowledge in that space for that company for about 6 years. Kind of got my kids through their elementary years, and then ended up working for Grubb & Ellis, doing more like institutional grade properties. And it's been an interesting ride. I feel like I've done a lot of things in the valuation industry. And my job, when I had actually applied for the Grubb & Ellis role, I applied to be a staff appraiser. And the gentleman who interviewed me had asked me, he's like, well, we're also hiring for a managing director. Would you want a director role? And I said, no. I don't have any training for that. I've never managed people before. That's not what I'm applying for. I just, I'm here to be a staff appraiser. And he called me back about 2 weeks later. He's like, no, we really want to consider you for the role. And I said, well, I'm going to need training. I'm going to need some oversight. I need some guidance. I need some mentorship. And they said yes to all of it. So it was a really big leap. I didn't really know what I was getting myself into. But frankly, had I not done that, I might not have opened some other doors for myself and really had that springboard in my career. So I said yes to a management position. It was really cool because now I got to build a team, grow a team, really market to clients, kind of work in a capacity that I hadn't really worked in before. It was more on the business side of it. And it was really exciting. I loved building a team. I loved partnering. I had some really great gentlemen that I worked with alongside me, really, really qualified people that could really help me attract some good talent as well. So we built out a team, and it was a great run until Grubb & Ellis filed for bankruptcy, and we were all left without jobs. So that was unfortunate because I was really just getting my feet underneath me, and it was a good springboard. But really quickly, I was able to pivot. I started looking at other valuation companies around the country who were doing work in Denver. I reached out to all of those companies and said, hey, we've got a plug and play team. I've got 6 appraisers. We've got a book of business. You don't have to buy us. There's nothing to buy. We just need a place to land. And so pretty quickly, there was a group out of Dallas that stepped up. And a week later, my entire team had offer letters, and we were able to plug right into their platform and keep doing what we were doing. So we were able to keep our team intact. I only lost one appraiser in that transition. He had already started interviewing for jobs when the writing was on the wall at Grubb & Ellis, and decided to kind of pursue another job that he was chasing. Amazing
opportunity. One quick thing, I know we have such a breadth of peers that listen to the podcast. You want to just touch for maybe just real high level on what is eminent domain and what were the valuation role that you would be involved in on behalf of a client?
Yeah, so eminent domain is really when like a government entity or some governing body says, hey, we need that parcel of land, or we need that strip of land for a bigger maybe infrastructure project, or maybe there's a road widening, or maybe the county wants to build whatever they might be doing. And so the way it works in Colorado is the property owner, whoever owns the property, gets an appraisal done. The state will do their own appraisal as well. And then hopefully both parties can meet in the middle somewhere. Sometimes they go to court and they fight over it. But it was a great way to be on both sides. The firm that I worked for did a little bit of representation, like getting hired by the state, and they also did some private property ownership as well. So we basically, it wasn't a transaction where a traditional appraisal might have been ordered for a refi or a purchase. This was, the government stepping in and say, hey, we're widening the road. We're going to take 20 feet off your land. We're going to compensate you for it. And then the appraisers would get hired to figure out what the value was, like what the fair compensation should be. So really fascinating segment of the appraisal world. One that I didn't really know existed until I had joined that group and was really exposed to that line of work. And it's working with, attorneys in a lot of cases, understanding, real estate law became critical, understanding what the states could and couldn't do, how they valued certain aspects. It was all really just a fascinating segment of the industry.
Yeah, I appreciate you taking a moment to explain that, because a lot of people will never connect with peers that do that kind of work or be associated with that type of assignment. And as you said, it's a big factor, especially when you look at some of the foundations of our country. Property rights is a big, big piece of that.
Right, absolutely. The group that I worked for was just a boutique firm. That was their primary focus was eminent domain. And so, the principals there, they're still doing it to this day. I stay in close contact with them, and they're still cranking away. It seems to be less cyclical than the rest of the appraisal world, which really kind of cycles with interest rates and transaction activity. The eminent domain stuff tends to be pretty consistent.
Long cycle too. That's a big factor to it. No, that's fascinating. Did you all just do eminent domain in the greater Denver area?
Yeah. So the state of Colorado, they did projects all over the state, mm-hmm. and we did a little bit of bank work too. So I was able to supplement doing some bank work, but that was not their primary focus. It was really focused around the eminent domain.
So Jaimee, thanks for sharing a little bit more about that. That's pretty fascinating about learning a whole different perspective in valuation. And then you mentioned your initiative, ingenuity, if you will, was like, hey, I've got this team and we want to find a new home, keep the team intact, so to speak. What was that next step like?
Pretty fascinating. Joined a group that was growing rapidly across the United States. They, like I said, they were headquartered in Dallas, and they had done a little bit of stuff regionally, but really had a high growth trajectory. And so when I approached the CEO of that group, I just said, "Hey, we just need a place to land. We've got business. By the way, where else are you growing? What other markets are you looking to be in?" And she had rattled off some of the other cities that were kind of on their first initiatives. And I was able to carve out helping them grow the Phoenix office and then also having a presence down in New Mexico and covering that market from either Phoenix or Denver. So it was really great working with a very entrepreneurial organization. They were able to make decisions very quickly. My entire team, we had offer letters within a week of our first meeting. So we kind of needed to move fast. Our doors were closing at Grubb & Ellis. My team, they still needed paychecks. We had reports to write. We had clients that we were still trying to serve.
You had clients, yeah. You had deadlines you had to meet.
We had deadlines. We just need to plug in instantly and make this happen. And so the fact that they were able to act so quickly, get laptops shipped out to my team, get us all set up, with IT resources, and plug right in, it was a really, really good fit for us, all making a transition, because it was a little nerve-wracking. It was a challenge, I think, for a lot of my appraisers to trust the process and trust that we were all going to land, in a safe place, that we were going to be okay, that we could preserve our jobs. But I felt like the group that we landed with, they were very welcoming, offered us a lot of training, a lot of support. I mean, it couldn't have been a better fit.
Fascinating. And did I understand you to say that you find a new home through your initiative, and then as a result, you actually go on to help this new home expand?
Yes. So I was able to spend some time down in the Phoenix market, getting to know some of the folks down there. I would go down there, try to just meet as many people as I could. So I had existing clients down there, so that was a great start. And then I would ask those clients, what other appraisers are you working with? Who do I need to know down here? And then I would just start connecting with those folks and really presenting an opportunity like, hey, we're trying to build a team down here. We want to have a presence down here. And I was able to recruit a team. I think they had about 4 or 5 appraisers all together. And so getting that team kind of over to the platform and recruiting them was a really big win, because it was a good mass to really get that momentum in that market that we needed, and then able to grow it from there. So had a managing director down in that market who could really oversee that team, who I could transition some clients over to, and then really gave him the tools that he needed to help grow that and continue to build around that. And they actually ended up being one of our top performing offices. That team just crushed it down there. They did a ton of multifamily. We did all property types, but had a really good multifamily background and presence. And then just really served a greater region from that Phoenix office.
That's impressive. And you went, and that was a homegrown team, is what it sounds like from what you were sharing.
Yeah, we recruited them from from a competitor, and then able to grow that team with some other, kind of folks that we could recruit as well. So it felt like a really good success story. So I was running with my Denver team. I was able to build out an equivalent sized team down in Phoenix, and then continue to grow both of those offices. It just, again, working for an entrepreneurial company that really had a growth mindset and was willing to contribute the resources to help that happen was a real welcome change from sort of the corporate environment that I came from before at Grubb & Ellis.
Yeah, that's exciting. And to hear that you took on that role, at least for an interim period of time, of not running one office, but 2. I mean, that's a big undertaking.
Yeah, it was. And I liked going down to Phoenix. Selfishly, I had a sister that lived down there. So when I would go down there, I had a place to stay, and, I got to see family. And so it was a real win-win for me.
I love that. That's a wonderful way when you can have those synergies come together. In this case, especially in the form of, like, in their case, sibling. They have that connection. In my case, it's a good friend. It's like, oh, Phoenix, sure, I can go to Scottsdale. It's not a problem.
Yeah,
happy to be there.
My brother-in-law, he was trying to figure out what he wanted to do as a career. So I introduced him to the appraisal profession. He now has his MAI. I kind of take a little bit of credit for introducing him, but I recruited him. He worked for me down there for a little bit. And then I said, hey, if you really want to grow, I can train you, but you got to come back to Colorado. So he and my sister made their way back here, but he's doing really well now. He's actually running a competitor shop here in Denver that I used to work for. So
wow.
I'm glad to see his career really take off, and he's doing really well.
That's amazing. And I gather that your career didn't stop there. So did you continue to open up new markets, or what was next for you?
Frankly, I started to burn out a little bit. The management role became a lot. Again, kind of focusing on 2 markets, traveling a little bit. My job became very management intensive. I was getting further and further away from the real estate and kind of deeper and deeper into some management responsibilities. And said, wait, time out. I want to reevaluate this. And I also had a kind of a health consideration come through as well, but that kind of stopped me in my tracks for a period of time while I had to recover from that. So while I was recovering and trying to put my life back together, I really evaluated where I was in my career and said, all right, I really want to get back to the real estate side of things, kind of burning out on this management front. What's next? And so I actually took a gap year. I was 40 years old.
Good for you. Look at that. Don't have to be in college to take a gap year. That's fantastic.
Some people do a gap year at age 18 or 22. I took a gap year at age 40. So
love it.
I pushed the pause button. I sat back. I wrote my own job description and said, all right, what would I do if I could do anything? What would that job look like? I wrote a job description for a job that didn't exist. I evaluated different opportunities that were out there. I contemplated leaving the industry altogether, but I was able to dismiss that pretty quickly. I knew I needed to be in real estate. I connected with my network again. I started reaching out to folks that I knew over the years and just said, hey, I'm seeking an opportunity. I don't know exactly what I'm seeking yet, but I'll know it when I find it. And ironically enough, a broker that I had worked with for a number of years or collaborated with on some other deals, he was always really good about calling me back. We all know as appraisers, to get a broker to call you back is like pulling teeth.
Oh my gosh. You guys have to do a special little webinar on how to teach people how to get people to call you back.
Yeah. I actually used to write handwritten like thank you cards when people would call me back and give me cap rate information, like whatever they would do. I wanted them to know like how valuable it was. So he was one of the brokers that would actually return my calls. We could talk about cap rates. We could talk about market transactions. Like he would always share his knowledge with me. So he had asked me, he was like, well, have you ever thought about becoming a broker? And I said, no, I'm not going to be a broker. I didn't see myself as a broker. I didn't think I could be one. It was just not something that had any appeal for me. And he kept digging a little deeper. He's like, well, why not? Why don't you want to be a broker? He's like, you have this excellent background in valuation. He's like, you'd make a great broker. You have so much industry knowledge that you can really leverage. And so he's like, why don't you come meet my team? Why don't you meet the partners? Kind of learn a little bit more about it. Don't dismiss it yet. Give it a chance. So I met with his partners and continued conversations with them for about 2 months and said, all right, what the heck? What have I got to lose? Like, if it doesn't work, then at least I tried, but I'll give this a shot. So I was able to get my broker's license really quickly because my undergraduate degree was in finance and real estate. So I didn't have to take all the courses over, got my license right away, and then jumped into the brokerage world. And I loved it. I was like, whoa, what was I missing? Why was I so dismissive of this? I actually started to think like, wow, why didn't I do this sooner? So I think I'm always seeking ways to be challenged. I'm kind of seeking what's next? How can I grow? What can I learn? How can I continue to build on my expertise? And so I think I'm always kind of searching for that next thing that I can grow with. And the brokerage opportunity really gave me that chance. He didn't have to teach me real estate. I just needed to learn how to be a broker. I had some mentors at the company that really helped me grow, helped make some connections for me, helped me in my early brokerage career. It was funny because all the new brokers were in their 20s, right? These are like fresh college grads. And, here I am in my mid 40s trying to figure out like how to be a new broker. And it was kind of elementary. Like they would teach us like, what is a cap rate? How do you calculate a cap rate? And I was kind of rolling my eyes. I'm like, are you kidding me? Like, I don't need to learn all of this. I already know this.
Yes. Oh my God.
Once I got through that hurdle of like, all right, this is just the steps I need to take and kind of the painful part I have to go through, I ended up being my firm's top producing broker in 2020 in the Denver market.
Of course you were. Is there any doubt? I mean, all the background and experience you have. I mean, that's the thing I love about this podcast is there's just so many different ways to utilize valuation knowledge and experience, whether you stay in it, whether you stay around it, and whether you go and work on the other side. And here you are crushing it in 2020.
Yeah, pandemic year, oh my gosh, I'm not going to make any money. This is like, this year is going to be miserable. But I put my head down. I actually hired a coach. I hired a coaching program. And again, like was investing in myself. I was like, well, hey, if this is going to be a slow year, I might as well take the opportunity to learn and do this coaching program so that when whatever year this turns out to be, I can come out of the gates and be stronger and better for it. And that really propelled me to kind of get the right things in place, the right habits in place, and do the right things to really grow my business and close deals. I call them singles and doubles. When everybody else's big projects got put on the shelf that year, kind of the littler things that I was working on, those transactions were still happening. And so I was able to string a number of those together and have a great year. Yeah.
That's fantastic. What did you do, like a broker type coaching or like a life coaching kind of thing?
Yeah, it was broker specific. So it was geared towards commercial real estate brokers. And the program that I did was actually for people who are a little bit more seasoned than me. But frankly, like, again, I didn't need to learn the real estate. I already knew that. I needed to just learn the best behaviors and practices of brokers, successful brokers, and how can I implement those to kind of set myself up for success.
That completely makes sense. Once again, investing in yourself for the opportunity to grow and expand. So here you are now, a broker, and you're the one out there meeting appraisers at properties.
Yes, absolutely. Yep, all the time. And I actually call appraisers back.
You do? Oh my goodness. As they would say in the South, bless your heart. Oh my goodness. Fantastic.
So I love talking to appraisers. I know how hard it is to verify data. I know like the nuances of the job, and I'm happy to to contribute and share my knowledge as well.
Love that. I'm not familiar. We don't do any work in Colorado. I mean, I like to visit my friends there in Boulder and Denver. But aside from that, which isn't work, is Colorado a disclosure or non-disclosure state?
We're a disclosure state. So
Okay.
Public records, you can get a lot of information. But sometimes you just really want to understand the psychology behind a sale or the motivation. And that's not always conveyed in public records, right? Like they'll give you the price that was paid, but how do you really understand? How do they come up with that? Where there's some factors that played a role? What's the broker insight to kind of the marketing of the property? What were the challenges? So I think those are all really important questions to ask and information to have when the job as an appraiser is to replicate the market. But you've got to be tied into the market. You got to be having those conversations. Like you just can't get that information from county records.
Yep. That is so valuable. That difference of like, well, I just had a conversation, and I won't name the guilty party, just 2 weeks ago. And they're like, well, the property was exposed to the market, and therefore the market reflects all of the characteristics. And I'm like, BS. I'm like, if you know this market at all, you know that is completely mispriced. You know that there's something else going on there. And until you get on the phone and build some trust and rapport and get the inside story, your value is predicated on unsubstantiated information. And a sales price ain't going to get it done. And we just agreed to disagree. And I'm like, that's fine. It's your report, not mine. They don't work for me or anything. But it was, I love that. I don't know. I guess sometimes people are afraid to actually talk to other people.
Yeah. And it's a shame. Like this is a people business. Real estate's a people business. So yeah, you can't be afraid to pick up the phone.
Yeah. So are you still a broker today?
I am. I still have my broker's license. I do office and industrial properties. But probably more exciting, I actually recently joined up with a real estate fund. We're raising capital to invest in short-term vacation rental properties in Costa Rica, and then potentially Portugal as well. So again, another way to expand what I do. So I keep my license active. I do work for kind of close clients that I have worked with over the years, friends and family, but I don't really market myself as a broker anymore. I'm really focused on this fundraising effort for our real estate fund.
That's it sounds like it ties back into an earlier experience you had working with that large group that owned medical office and rail-oriented industrial property, but from a different involvement.
Yeah, different levels. So now I'm meeting with investors on a regular basis. I probably have 4 to 5 investor calls a day with prospective investors, learning about what their investment goals are, how our fund may be able to help them reach those goals. I get to speak to a lot of investors who are new to investing. They're just trying to build out their real estate portfolio, or they think they need to add real estate to what they're doing. There's a lot of investors who want to get out of the stock market. They have their 401ks or whatever tied up. They don't like what they're seeing in the stock market, and they want to put a little into real estate. They're trying to understand what makes the most sense. So it's really, I like working with investors who are trying to set themselves up for wealth building, reaching their investment goals. That's a really fulfilling place to be at this point in time.
Now, that is absolutely a fascinating place, not only to be, but to be contributing to, because they have an interest and a desire. And if they see the fund that you're associated with as a pathway for it, it's, hey, let's, hand in hand, let's go forward. And if not, hey, go find something else.
Yeah. If it doesn't fit for them, if they want to be in a different asset class, fantastic. Nothing lost. But if I can educate, a few folks along the way and join alongside these investors and, kind of reaching our goals, then we all win.
Absolutely. Absolutely fantastic. I mean, Jaimee, it's such a wonderful perspective to hear a broader understanding of there's a great benefit to starting out and just understanding valuation of property, literally boots on the ground or on the side of the mountain in your case. And then, as you pointed out, that desire to not sit still, to continue to press on for new opportunities in the marketplace, not just saying, I'm just going to stay here the whole time, and then taking on new roles, even when, as I heard you mention, like, hey, I'm not looking for that position. I'm just applying for this one. They're like, no, Jaimee, how about that one? You're like, and then being open to that. And look where you're at today. This is fascinating. Absolutely fascinating.
Yeah, it's been, now, the last couple of years, I've been a part of a mentor program. So I get to mentor young women in commercial real estate as they navigate their careers. And they're not necessarily in the appraisal profession. They can be in kind of associated real estate careers. But it's been really rewarding to work with young women who are kind of navigating the commercial real estate landscape, working in a primarily male-dominated industry.
Absolutely.
How can they navigate their careers? How can they gain some confidence in taking steps that feel really big for them? How can they move forward in their careers and maybe think a little bit differently than they have given themselves permission to in the past? So
yes.
I'm very grateful that in the way that all came about, that happened when I became a broker. I was looking for mentors.
Yes.
And so I was part of Crew Commercial Real Estate Women.
Yes.
And I said, can I sign up for the mentor-mentee program? I'd like a mentor.
They told you, no, you got to be a mentor, not a mentee.
Yeah, they're like, you have too many years of experience. I'm like, yeah, but I need someone to mentor me on how to be a broker. They're like, no. You've got 20 years of experience. We need you on the mentor side. I was like, all right. But I haven't looked back. It's been great.
I love it. Crew is a fantastic organization. I would encourage everyone to get involved. It's commercial. I think Crew, Commercial Real Estate Women. Is that...
Commercial real estate women, yeah, but we, everyone's welcome to apply. You don't have to be a woman to be part of the crew. So we have a lot of allies in there. I think it's a misconception that it's an organization just for women, and that couldn't be further from the truth.
No, it's not. But I can speak from outside of the industry. I do a lot of coaching and training for business owners and entrepreneurs in a global organization, and I just really appreciate that I have observed, not that it's factual, but I've observed that women tend to network a little differently than men, and they tend to mentor differently. And I'm not saying it's right or wrong. I'm just saying it makes a huge difference, especially in an industry like commercial real estate that still has, generally speaking, more men in it than women. And so that opportunity for you to step in and someone to, again, recognize you and your initiative and your talent, say, hey, we want to get you more involved than just what you were asking for. And to be able to do that, Jaimee, I really acknowledge your contribution. It's extremely valuable.
Yeah, thank you. I had a younger gentleman that I worked with. He doesn't know that he was a mentor to me. I never officially called him that. He was far younger than me. But I was learning how to be a broker. And I was trying to, I was observing all the brokers around me, like who's having success, who do I feel like is really has some practices in place, who am I observing, and who do I want to model? And so I'll call him a kid. He wasn't really a kid, but to me, he was a kid. And when I would come up with a challenge or, be in a situation on the brokerage side, I'm like, gosh, I don't really know what to do next. I would sit back and I'll call him out here. I won't say his last name, but I'll say, what would Sam do? And I would think about how Sam would handle that. And then I would thread that into whatever I needed to do to proceed. So he wasn't a formal mentor to me, but I observed really his hard work, his determination, and the things that he was doing. And I would try to model after that. So just because, age doesn't really have anything to do with it. You don't have to be older than somebody or younger than somebody. Like I happened to find somebody who I valued their work ethic and I could model career after my own.
I think that's absolutely a great point. If I'm not mistaken, the late Jack Welch famously introduced that concept a couple of decades ago, that every one of his divisional CEOs, which were equal to like Fortune 50 companies back in GE's heyday, needed to go out and essentially adopt a young person as a mentor. Because there's so much to learn. I mean, we get sometimes caught up on this age factor. It's all about experience. It's not about age.
Yeah.
I love that. So you mentioned an interesting tidbit that I think most people caught, but in case they missed it, you said you are also now involved in a fund that's investing in short-term rentals in Costa Rica and Portugal.
Yes.
Tell us a little bit about that. That's fascinating. I mean, a lot of people they understand the concept of Airbnb, but they probably haven't thought about running the numbers on it, much less been on the other side trying to value STRs as it relates from a lender standpoint. We won't get in that hornet's nest, but talk to us about the fund side of it.
Yeah, so the fund that I work for now is Blue Fusion Capital. We are actively fundraising. We have about 40 investors in the fund, and our average investors coming into the fund around 50,000, but we've got investors at kind of entry level, like much lower than that, and then we've got $1 million investor in the fund and everything in between. So when we're looking at short-term vacation rental properties, we're looking at properties that are already cash flowing, turnkey properties. We can go back and look at the history. We like to have like at least a 2-year history. We'll look at the performance of that property and say, hey, here's what the market tells us what ADR should be, like, and that's average daily rate. Here's what the market tells us occupancy should be. How is this property performing relative to the market, what the market data says? We use a resource called AirDNA. So we get to utilize, industry published data as a benchmark to the properties that we're evaluating, and then say, hey, we think we can, maybe do this a little bit better. We think we can improve operating expenses. We think we can push ADRs. We think we can make improvements. Say we're going to add air conditioning and try to push our ADRs a little bit higher, or whatever the things might be. So we are evaluating these really as a business model. It's not like appraising a house. And to be fair, I don't come from a residential background. I understand how to appraise a house, but I've never done a house appraisal. We're really looking more at the performance of the property as a business, if you will. What's the income? What are the expenses? How much revenue can we, or net operating income can we expect from this property? How can we grow that? And then what are we anticipating on the back end of this? If we hold it for a couple of years, what sort of appreciation are we applying? And then what does that return look like? And so when we're working with investors, we outline that for them. I mean, we do one-on-one investor webinars where we'll sit down with an investor. We actually show them our spreadsheet. We're a bunch of appraisal nerds, honestly. We came out of the appraisal profession. The gentleman who started this is a 35-year industry veteran.
Is he that old? Oh my goodness, he looks really young for his age.
Yeah, he's...
Holy cow, we're going to have to encourage him to get outside a little bit more.
We could roast him, yeah. So we're both industry veterans. We used to actually joke that we didn't make a lot of friends in the appraisal side of the business because we were always killing deals, right? Like nobody likes appraisers because we come in and kind of squash everybody's deal. But we're taking that same level of scrutiny when we're analyzing properties and really sharpening our pencils and saying, all right, how do we think we can operate this better than what it has been operating?
Sure.
Where do we see the upside? And where can we make some money and really provide some return to our investors? So we're focused in the short-term vacation rental space. These are VRBO properties, Airbnb properties. I think we all have, if we haven't stayed in an Airbnb on our own, we all know someone who has. So that segment of the market is really growing and growing rapidly. We're very careful on the markets that we choose. The reason we like Costa Rica, it's very favorable from a tourism standpoint.
Yes.
A lot of our domestic markets are really challenged, and there's a lot of governmental restrictions and rules coming in on short-term housing. There's arguments that segment is really taking away from local employee housing and really creating some inequalities and cost of living in some of these markets. When we go to Costa Rica, their number one economy is tourism. they want tourists there. They welcome Airbnb properties. So we don't feel like we're faced with that governmental risk that we might have in some of the domestic markets currently. So we love Costa Rica right now for those reasons. Our dollar is going really far down there. We're targeting about a 20% IRR, internal rate of return, on the portfolio overall. So yeah, we're actively seeking investments until June of 2024 or until we hit our $50 million subscription, whichever comes first as a Reg A+ fund.
Well, the good news is with, so many successful valuation professionals listening, you'll probably be oversubscribed before the end of this podcast.
It could be, yeah. That's great.
So Jaimee, we always love to hear our peers' perspective on over the next, say, 3 to 5 years, given everything you've been exposed to, and you have had just a diverse set of experiences. What are you optimistic about or looking forward to?
I'm really optimistic in real estate as a profession, and not just the valuation. I think there have been some challenges there, but I do think that young professionals that are kind of trying to decide what career path they want to take, I think real estate can be a very broad, diverse career trajectory. And what I would say is try a little bit of everything, kind of figure out where you stick, figure out where your strengths are. If you're very analytical, appraisal is a fantastic place to land because you're analyzing markets, you're analyzing properties, and you're learning so much about how to underwrite properties. You can take that a lot of different ways. If you're more outgoing and maybe a little less analytical, the brokerage path is a great place for people who aren't afraid to pick up the phone, aren't afraid to hit the streets, aren't afraid to, talk to business owners and investors and put together real estate deals. Meeting with investors a lot lately, like that's a whole avenue of wealth advisors who are trying to help their clients navigate real estate investments. If you really understand how to analyze a real estate investment, what's a good deal, what's a bad deal, what makes sense, how can you maximize return, you can really help individuals who are trying to invest and reach their goals there. So I think real estate just offers a lot of different opportunities, and you kind of figure out where your skills, like your strengths, and you can plug into different avenues of real estate with that.
That is absolutely fantastic, Jaimee. I am never without a great sense of appreciation for the interests, the times, the hobbies, and the efforts that different peers have spent. And clearly you've got a lot of interesting stuff ahead, but I really appreciate you taking some time today just to share how what started out as, hey, I'm going to take this mortgage position while I'm in college and bought my first house, turns into you now helping build an STR fund in Costa Rica, of all places, if not others. So thank you so much.
Yeah, appreciate the time and appreciate you reaching out and having me on this show and the opportunity to share a little bit about the profession, kind of real estate in general, and maybe hopefully inspire those that are on their journey to not be afraid to take steps, and take some risks along the way.
That is exactly it. And, the other thing I heard in a lot of your sharing, Jaimee, was a willingness to not accept the status quo. Like, hey, I want to learn some more. I want to invest in myself. I want to gain some more perspective. And it was interesting how the road kept rising up to meet you at every step that you took in one way or another.
Yeah, don't be afraid.
I love that. Well, friends, one more call to action here as we wrap up, and that is this wonderful podcast, in addition to you liking it, grows because you share it. I can't tell you the number of people have said, Michael, I didn't even know the Perusing's podcast existed. It's so nice because it's just so different. It's refreshing. It's informative. And I get to learn something about a peer maybe that I know, or I get some inspiration from someone who I don't know, but is in or has been around the valuation profession. So please be generous. Please keep that holiday spirit in mind and share it to 2 people this week instead of 1. With that, Jaimee, thank you so much for joining us.
All right. Thanks, Michael. Thanks, everyone.
Thanks for listening to this week's episode of Perusing's Appraisers on Purpose. We hope you enjoyed learning from the amazing life paths and achievements of our guests. Don't forget to like us on LinkedIn and other podcast channels to hear more from appraisers and valuers regarding their life and their work. If you have any suggestions or questions for future episodes, we'd love to hear from you. Just send us a message on LinkedIn and we'll be sure to get back to you. Thanks again for listening, and until we're together again for the next session of Perusing's Appraisers on Purpose, create the change that you seek.